The following program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit AbsoluteLoans.com or call 888-90-HOMES for cost information. You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to the Money Hour on Alternative Talk, 1150 a.m., the Saturday, May 17th show. I'm your host and mortgage expert, Tina Mitchell. Thank you for taking time to talk money. I bring into studio each week the best of the best, experts in our local market on everything money, and I'm here to help you in today's economy. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but we're here to answer any questions or connect you with any of my guests that I have in studio today. Please call the show 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And a lineup of my guests in studio today is Scott Monroe with Windermere Real Estate Wall Street, here to discuss the importance of choosing the right mortgage consultant. Yes, I said the right mortgage consultant. He is a realtor expert, but I'm really excited to actually have him talk about my arena and the importance of a good mortgage consultant, a mortgage company, and how that process can really make a huge difference in the success of buying your home. And second guest in studio, Mary Lee with Windermere Bellevue Commons. If you're a seller, you're probably looking for ways to maximize the potential profits and maximize the opportunity and the efficiency of selling your home. And that's why I have Mary in studio today. And my last guest today is Matt Loftin with Davis Wright Tremaine. Some people ask why estate planning is important. And the simple answer is you want to protect your loved ones and make sure that they're taken care of and that your money is allocated to the appropriate spots for your loved ones. Great information and great guest in studio today. For more information on any topics discussed, please call into the show at 1-855-400-1150 or online at themoneyhour.com. Again, it's 1-855-400-1150 or online at themoneyhour.com. Again, if you're hearing my show on a different time or day, you're listening to a rebroadcast, but always interested in talking to any of my listeners. And let's go ahead and start out the show with a little money chat.
Money.
I want to talk a little bit about a new program that is very specific to something that we have to offer at my company, Absolute Mortgage, division of Pinnacle Capital. And it's for any of you out there right now. Maybe you've tried to gone through the home buying process and for whatever reason, you could not fit into the traditional financing box and were declined for a mortgage. This is a really good opportunity. You definitely will want to stay tuned and listen. Or if you're a mom or a dad or a brother or sister and you have a family member that's just getting discouraged because they can't get financing for a traditional home mortgage, this is a segment you definitely will want to listen to. I'm going to talk about the MAP program. It's a mortgage alternative loan. And what it is, it's a rent and own. It's not a rent to own. It's a rent and own, which basically means that you have two contracts as a rental contract and then the ability to turn that contract into an own contract. So why would you do this again? It helps people that are not available in the traditional financing and fit into that perfect box. So an example might be if you're listening and you have some credit challenges. Maybe you just foreclosed on your current home. And that can be a little devastating, especially if you have children in the home. You have a school district that your kids go to. You have friends that they've made in the neighborhood. And maybe renting a property that there's nothing in that neighborhood for a rental, but maybe you see another home for sale right in the area that you're raising your family in, and you can't get traditional financing because you're going through a foreclosure. Well, this is an opportunity for you because one day out of foreclosure, you can qualify for this loan based on credit options. Maybe you've had a bankruptcy, a short sale. Maybe you've just started a business. So you have experience in a specific line of work, but now you're just deciding to go on your own and open a business. And those of you that are trying to get financing, just opening a business, traditional financing is not available. These are just a few examples that might help you get into a home right now on a rent and own scenario. So here's how it works. There is a minimum down payment requirement. You're going to be required to come in with a 5 to a 10% down payment. The 10% down payment option is going to be really beneficial if you want to have a fixed price. What I mean by that is if you're purchasing a home for $400,000 today, what if I were to tell you that that home would be $400,000 when you turn your contract in 6 years from now, you're going to pay $400,000 for that home? That's a pretty sweet deal. If you think that we're going to be seeing appreciation in our market, and I'm not the realtor experts in studio today, but I know both of my realtor experts in studio today would probably say that the chances are good that we're going to see some appreciation in our local market here. And so if you feel that you are and you can lock into a price, a $400,000 purchase price today, and 6 years from now still pay $400,000, that's an option for you if you're going with a 10% down payment. Now, if you were to choose a lower down payment where you're going to do a 5% down payment, then you've got an option for a fixed, it's always going to be a fixed price over that 6-year contract. I say 6 years because that's the maximum that the rent and own contract can go for. You're going to rent for 6 years, turn it into a traditional mortgage when you've reestablished yourself in traditional financing, maximum at a 6-year period where you can own that home. So if you're doing a 5% down payment, then that purchase price is not going to be fixed at what you purchased it at. It's going to be going up at an appreciation per year of 3%, except for the first year. It's going to be 5%. So if you want more information on how this program is broken down, I'm going to go through a couple guidelines here, but it takes a little time to go through the analysis and see how the numbers look for you. Just pick up the phone. Pick it up right now to 1-855-400-1150. Again, my show phone number is 1-855-400-1150. And anyone from my team can talk to you about how this program works, or if you want to talk to me directly, I'm always available for any of my client and my listener needs. So that 5% or 10% down payment that you're coming in with is going to go into an escrow account. So that money is going to be held in an escrow account for the period of time that you have that contract. Now, you don't have to keep the contract for 6 years. It's just a maximum of 6 years. So let's say that you get into the property and you've been in the home for a year, and for whatever reason, not that I think that this is going to happen, but let's just say that our market actually declines and drops in value. You paid $400,000 for your home, and now you see that your home is worth $380,000. And now you figure out that you're actually going to be moving and relocating to another state. So the idea of actually turning this into an own in any period of time is not an option for you. You can walk away from your contract. Completely break the contract. It's not like foreclosing on a traditional loan, because it's a different scenario. You're just walking away from the contract, and there is a penalty for doing that. You're going to lose 3% of that 5% or that 10% down payment that you came in with. So that money is going to be lost for breaking that contract. There's no prepayment penalty at any time if you want to turn it into a traditional financing before that 6 year. Or here's something else that might happen, that you own this home, but let's use the same example. For whatever reason, you're getting relocated to another state and you don't want to stay in the area. You don't want to turn it into a rental property to where you're renting to somebody else, but you've seen appreciation in the property. So you got in at a fixed price of $400,000, and let's say 2 years from now that home is $450,000, but you don't want to limit it because you're relocating to another area. Go find yourself a buyer. You've got the option to sell that property anytime you want to because you are in a rent and own contract. So you can sell that property, pay excise tax and whatever it would cost to sell with your real estate commissions, and pay off the mortgage to the bank that has put together this contract for you, and you leave with some instant equity. In that situation, there's no early prepayment penalty, so you're not out anything. You just have, as long as you're selling it to someone else, then you're going to be okay. So it's a really great program to get into. Here's another option that you might look at. Those of you that are in the market right now as cash buy, or you're competing against cash buyers. So this is somebody that qualifies for a traditional financing. You've got a mortgage, you're out there shopping around for homes, and you're buying anywhere in our amazing areas in downtown Seattle. I'm telling you, you're going to get into a multiple offer situation. And if you're in a multiple offer situation and you're against cash buyers, a lot of the times you're losing out on that opportunity. You may be an FHA buyer, and because you're FHA, you're not as strong as a cash buyer, or you're a low down payment conventional buyer. If that's a situation, this could be another opportunity for you as well. Go in and pay cash for the home, because that's what this loan does for you. The lender is coming in and they're paying cash for the property and rent and owning it back to you. You turn around after closing one day after, go pay back that contract to the bank, and you've got your offer accepted when before maybe you could not. So again, if there's questions that you have on the specific program, feel free to give my show a call, 1-855-400-1150. Again, 1-855-400-1150, or online at themoneyhour.com. Coming up next on The Money Hour, if you're a buyer in the real estate market, one of the most important people in the process is me, your mortgage consultant. I am your host, but I'm also a mortgage expert. I just thought it would be a little bit of fun to spin it around and have a real estate expert give his opinion on what he thinks is important about my arena, and a mortgage consultant. Scott Monroe with Windermere Real Estate Wall Street right here on Alternative Talk 1150 after this short break.
Ranger Station, Ranger speaking.
Hi. I'd like to report a bear hug.
Okay.
Well, before I left my campsite, I was putting out my fire, and out of nowhere, Smokey Bear showed up and hugged me?
So you drowned the fire, you stirred it, drowned it again, and felt that it was cold?
Uh-huh.
Oh, yeah. He likes it when people correctly put out their campfires. He's pretty big on wildfire prevention. He's just letting you know you did good with a hug. He's a hugger.
I just got a bear hug from Smokey Bear. Status update!
All right, I'm going to let you go now. I've got a lot of ranger stuff to do. There are many ways to start a fire, but one sure way to put it out. Learn how you can do your part at SmokeyBear.com.
Only you can prevent wildfires.
Sponsored by the U.S. Forest Service, Ad Council, and your state forester.
1 in 5 children in America go to school hungry every day. I'm Viola Davis. I was one of those children. I was one of the nearly 17 million kids who worry where their next meal will come from. Join me with the Safeway Foundation and the Entertainment Industry Foundation to help us end childhood hunger.
Help undo hunger for America's children. Go to hungeris.org to learn more.
This is The Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to The Money Hour with your host and mortgage expert, Tina Mitchell, right here on Alternative Talk, 1150 AM, the Saturday, May 17th show. Each week, I share expert advice and inside knowledge on how today's events and local economy can affect your money. If you're hearing my show on a different time or day, you're listening to a rebroadcast, but we are here to answer any questions or connect you with any of my guests that I have in studio today. It's really important to talk with my listeners, so please take down the number 1-855-400-1150. Again, my show number is 1-855-400-1150 or online at themoneyhour.com. In studio right now, Scott Monroe with Windermere Real Estate Wall Street. I'm excited to have Scott share his expertise on dealing with a mortgage consultant and the most important process or the most important people next to your realtor is the person that's representing your financing. So it's important to work with somebody that knows what they're doing, works with a reputable company. And I just thought it would be fun to have Scott as a realtor expert because it's such an important part of his team to give his opinion and his advice on that. A little bit about Scott. Again, he's with Windermere Real Estate since 1992 and is still at the same firm, which is really unusual in the real estate community. You see a lot of moving around, and so it's nice that you're established in one company and one place. He's been consistently in the top 3 agents in Wall Street in Wall Street's offices. Certified relocation specialist working with corporate transferees, moving in and out of the area, working with Boeing, Microsoft, Amazon, Starbucks, T-Mobile, Google, and eBay, just to name a few. So obviously you work with some really quality companies here in our local market, Scott. Prior to real estate, Scott grew up in a family of builders and joined the family business building homes and schools all throughout the state of Alaska. Also spent time in Japan working with Japanese home builders and won an award for a model home in
Sapporo, Japan.
Thank you, Scott. I appreciate that. Scott, thank you so much for coming back in studio.
Happy to.
Thank you. And I actually forgot to mention the listeners, this is my first show here on my new station, and so I appreciate all my guests coming in. They're all regulars and have been in studio before, but a little bit different process here in the studio that we're at. So thank you, Scott, for joining my first show here at the new station.
Happy to be here.
So let's go ahead and start out with a mortgage consultant. For those of you that are listening, our first-time listeners to the show here on my new station, I am a mortgage expert, and this is what I do for my regular business. I just hang out with my listeners here once a week in studio. But, Scott, in working with a mortgage consultant, it's a big process when securing financing and getting through the process efficiently. Is that true?
It's one of the biggest processes, and I think a lot of people minimize it because they think it will be an easy process, and sometimes it is, but a lot of times it's not. And so I thought it'd be fun to kick that around today.
So let's talk about some things that can go wrong. Give me an example that we can share with the listeners. In your experience, mortgage consultants that come with a buyer that you have not put them through your team, so it's someone that you don't know. What's one example of something that can happen with someone that's not established in the industry?
Well, I can think of lots of examples, so that'll be fun to kick some of those around.
I know, that's why I asked for one, Scott. I know you got a zillion.
Here's a classic one. This happened in recent months, and this was a client that was pre-approved with a name brand company, a bank in Seattle, and they had gone through the entire approval process. Mm-hmm. And then at the end of the deal, 2 days before closing, they decided they wouldn't send out the docs. They refused to do the deal. And as we got deeper into the why part of that, because I was brought in with this buyer. They were already approved before I had met them, and so this was something that we can talk about, why they didn't use somebody I would have probably chose over them, but they were already approved, went through the formal approval process. The deal blows up 2 days before closing. Meanwhile, the subplot is the roofer had already put a roof on the house, replaced the furnace, done some work orders, all this stuff, with the sterling, gold-plated approval letter from this national bank. And as it turned out, this bank in particular decided not to do the deal because of an overlay, which is a fun word that most people have no idea what that means.
So an overlay, for listening, it's your major banks are going to have overlays that go over and above the standard secondary market guidelines. So everybody's pretty familiar with everything that's happened in the mortgage crisis with Fannie Mae and Freddie Mac. So Fannie Mae and Freddie Mac, which is the secondary market, they set up all the guidelines for lenders. Your major banks, all of the major banks have overlays to where they have additional requirements on top of what the standard minimum requirement would be. So go ahead, Scott.
Absolutely. And so even the mortgage consultant whom I knew and is married to a real estate agent too, so she knew the gravity of what was happening, was helpless to really help that buyer through. So we had to pull the package, pull the deal, pull the buyer out, go with a local firm. And of course, we got it through.
And so the difference, Scott, I mean, when he's talking about local firm, you have a mortgage bank, like your big bank names, Wells Fargo, Bank of America, Chase, whoever that is, U.S. Bank. And then you have your local, which would be like myself, Absolute Mortgage. And there's other local companies that are called mortgage bankers. And mortgage bankers have direct to Fannie Mae and Freddie Mac, as well as they have portfolio lines to where they don't have the additional overlays, or they can broker out to lenders that can structure that a little bit differently for case-by-case scenarios that they need. Correct, Scott?
Absolutely. And probably I've done this a long time, and the mortgage process is pretty important to me as a real estate agent because, the deal obviously lives and dies with the loan. And again, anybody can do an easy deal, but probably the most common thing is people come to me and go, hey, my Uncle Fred's a lender with, Litter Green Mortgage Services or something that I've never heard of before. And, we don't want to hurt his feelings, so we're going to use him.
Yes.
And, of course, their feelings get hurt later.
Yeah, they get hurt pretty bad if the whole financing falls apart.
Exactly.
So let's go back to that. Let's talk about the difference between, because they may be with a great company, but it's not always the company. And majority of the time, it's not the company, it's the individual. Now, they have to be with a great company, so that can mess things up in the example we talked about. But also, you can be with a great company, but it's the mortgage consultant themselves that also can make or break the process. Is that correct, Scott?
Yeah, the criteria I look for is, A, no cubs. By that I mean I don't want a newbie in the business doing something that doesn't know really the process, doesn't have the courage to really go,
and
wrestle.
Fight for the clients,
Exactly. And are the documents coming from another state? Is the processing in another state? Is the underwriter in a different state? All these different things.
Sure.
Or the guy that works out of his basement, Fred's Mortgage Services, that is going to sell that deal to somebody else during the process, where there's kind of a two-tier approval process. So they get the guy approved through their little metrics on the computer.
Yes.
And then when they go to try and source, who's going to fund that loan, they're having
There's
trouble.
issues. So let's also talk about the pre-approval and the fact when you're in a multiple offer situation, anybody that's listening today that is in buying process, they know that it's really, really challenging out there. And you've got multiple offers, maybe 5, 10, 20 people making an offer on a home all at the same time. And those pre-approval letters come in and they see a pre-approval letter that doesn't have somebody from Bellevue or Seattle or Washington, but it's got somebody from another state. The listing agent that represents the seller, what would you be looking at? What would you think with that?
Several things. Recognition, I've done it a long time. A lot of these deals are done in the evening or on weekends. If somebody's not even going to answer their phone so I can talk to them about the deal.
Sure.
That's important. If I'm the buyer's agent, often in a multiple offer situation, we're going in appraisal only or with no financing. So I don't want to put the client at risk if this is not a bona fide company that is got the background and the experience to make sure that this is a legit approval. But when I'm the listing agent, access, quality name, history of closing deals on time, which is a huge thing. And being thorough, somebody that has thoroughly vetted the client. And for instance, with corporate reload clients, they all want, if you sell a corporate listing, for instance, they want assets, income, and credit have been verified. That has to be written on the approval letter.
Yes.
And you'd be blown away how few people actually have done those 3 steps in an approval process, which means it's not worth much.
Yeah, and so Scott, if you were advising someone, a listener that's not calling into the show, so they're not working with you or I, and they're just wanting to know what would you be asking the lender? What's the most important question?
If I don't know them, you mean? How they do their business, how they come up with their approval process. Is it in-house underwriting? Where are the docs coming from?
Okay.
Again, I want to know that this is a kind of a local deal.
Yes.
And more excuses are given from like a B of A or Wells where things are coming from out of state and everybody can kind of point to the other guy and say it's not my fault.
Sure.
And I don't want to put my seller in jeopardy of a deal not closing on time.
And here's what I would tell you if you're listening. If you're confident in the real estate agent that you have chosen, if not, you need to pick up the phone. You need to call my show. If you're not totally confident that realtor has the experience, the knowledge, and the ability to help you through this process, then you need to call the show 1-855-400-1150, 1-855-400-1150. I can directly connect you with Scott. If you have that representation from your realtor, you need to look at who they're using for their team. Escrow, inspector, lender, their job is to make sure that they're making sure that every area is covered. They want to make sure this closes just as much as you are. They're there to help you through the process and ultimately close on your home. I don't know what the percent is, Scott, but I remember hearing 30-some-odd% or something out there just recently of financing that completely falls apart. So I'm talking about you're in a process, you're approved, and your financing falls apart. The worst thing that could happen to you. So follow the lead of your real estate agent. Follow the lead of their expertise and the team that they've built together, because trust me, they work really, really hard to find the best of the best that are going to take care of you.
Yeah, I've had 2 in the last month that were late or, in jeopardy because of inept mortgage people.
Yeah.
And one other probably last caution is be aware of realtors that also do loans.
Oh, yeah, that's not good.
Run for your life.
That's great advice. Well, Scott, thank you so much. It was great having you in here again on my show, and first time here on 1150 AM KKNW, and excited to have you back.
Good to see you again.
Okay. Coming up next in the Money Hour, if you're selling your home, you want to market your home for movement and to appeal to the emotions of the buyers that are walking through that home. Why? That's how you're going to maximize the dollar and the potential on your profit and get yourself into the situation and the position that you want for your family. Mary Lee with Windermere Bellevue Commons, right here on Alternative Talk 1150 AM after this short break.
More than 1 million wild animals are killed each year illegally. Poaching is a major threat to our country's wildlife. I'm Tom Barry. I'm an actor with a desire to preserve living space for wildlife. The Humane Society Wildlife Land Trust does just that. Works with private landowners to protect wildlife, to preserve natural habitats. To learn more or to work with the Humane Society Wildlife Land Trust, call 800-729-SAVE. That's 800-729-SAVE, or visit wildlifelandtrust.org. Thank you.
Today might be the day I drop out of school. Today could be the last day I try. My parents alone can't stop me. My friends can't even stop me. But you might be able to. With United Way, you could tutor me, be my mentor, or volunteer to just read with me. If someone had helped me earlier, I might not be struggling. And studies prove that kids who read well by 3rd grade are more likely to graduate. There are tons of ways people like you can help kids like me stay in school. And United Way is calling for you to be one of them. Because it takes 12 years to create a graduate. It takes about the same time to create a dropout. And the difference between me becoming one or the other could be you. Make me a success, not a statistic.
Take the pledge to volunteer now at unitedway.org. Brought to you by United Way and the Ad Council.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on Alternative Talk, 1150 a.m., the Saturday, May 17th show. I'm dedicated to my listeners, providing you with the tools needed to make informed decisions on matters that affect anything that affects your money. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but we're here to answer any questions, to connect you with any of my guests that I have in studio today. Please call into the show at 1-855-400-1150. Again, that's 1-855-400-1150, or online at themoneyhour.com. And in studio right now, Mary Lee with Windermere Bellevue Commons. Even in today's market, you need to be strategic in how you market your home for sale. The reason why is because you can get bottom or you can get top dollar. You can maximize the profits, and that's why I have Mary in studio today. Mary, thank you for coming in.
Thank you. It's great to be back.
And Mary is with Windermere Bellevue Commons, has been a licensed agent since 1987, and is a former vice president and director of education of Windermere Real Estate, the Northwest's largest real estate company. She is a highly accomplished real estate broker and is in the top 1% of agents in the Seattle and East Side markets. Mary's committed to creating exceptional results for every client through her proven strategies in house preparation, proper pricing, innovative promotion, and expert negotiating skills. Mary is creating a new standard of real estate skills and expertise with her certified results agent designation, which showcase agents who get their clients' top results in the marketplace. Mary is a master certified negotiation expert, one of only 200 in the nation with this advanced designation, as well as a senior real estate specialist, accredited seller representative, and a luxury and view home specialist. Mary, quite the bio, and I know I personally work with you day in and day out almost, because you have so many buyers, and I'm privileged to be your preferred lender and happy to work with your team. And I'm always excited for you to come here because I myself educate the lending industry and really help loan officers and mortgage consultants to maximize the way that they educate their clients in building a software and coaching. You're doing the same thing with your designation and everything that you offer in coaching with other agents, especially when it comes to the listing side, and just really specializing in that. So, Mary, thank you so much for bringing your expertise to my listeners today.
You're welcome.
Let's go ahead and just start right out with, we're going to talk about your exclusive listing process called the Ultimate Home Selling Success System. And in today's market, Mary, why is it so important to price your home properly? And why in this market can people miss and not price their home properly?
Well, there's three things sellers hire us to do: interpret market conditions, which includes pricing the home, create maximum market exposure, and negotiate the sale and protect the seller's profits. And, pricing is one of those moving targets, and there's a lot of factors that go into proper pricing. So it's important to price a home properly at the beginning, because you're really new on the market one time. That's when you have the best chance of securing the best buyers that are looking in the marketplace. The property history in the MLS goes back to the year 2000 currently. So if there's a off-market, back-on-market, price change, all of that history is really a permanent record on that address and seller. We call it the parade theory. We tell our clients the parade comes by your house one time.
Like that.
And it really illustrates how the market works. Buyers are, in today's market, factoring in additional dollars for negotiating in a multiple offer situation. And in our current area, it's between 5 and 8% right now.
Wow.
So if a seller picks their happy, hopeful price, they could literally be pricing themselves out of the market from a well-qualified buyer that would be willing to write an offer but just doesn't want to waste their time or offend the seller or doesn't have those extra dollars in a multiple offer situation.
So, Mary, what are some methods that you're using to evaluate the property and the price of someone's home?
Well, we obviously start with King County records. We want to see, your build, square footage, lot size, location. We also extensively research through the multiple listing service neighborhood sales for general market information and more specifically comparable homes that are very similar to the sellers. There's a lot of factors that go into evaluating a property, and it's really difficult for sellers to even understand the term comparable or comparative market analysis because no two homes, unless you're living in a plat with newer construction homes and you've got the plan 3150B, most sellers' homes have intrinsic different values based on their home amenities. And, some of those might be updates, location, lot size, neighborhood qualities. We're view property specialists, so we know whether that's a $10,000 view or a $300,000 view. We do online evaluation just to check, Value Map and Zillow. We don't use that to price a home, but we know buyers and buyers agents are sometimes checking those. Sometimes we, on a unique property, will order a fee appraisal, which we'll pay for when warranted. We found using a cost per square foot analysis is just too unreliable because it doesn't account for updates and views and some of the other things.
So, Mary, let's talk about, because I don't know what the percentage of this is, but I know a lot of people overprice their home, and especially in a market like this, because there is just a massive amount of buyers out there, and so you think that you can price your home whatever you want to. The reality of it is you can overprice it, which is going to be a huge risk. And what does that really mean to a seller if they do that?
That's a great question. First of all, they miss the best buyers. They lose valuable days on the market. Your days on market help you in the beginning and hurt you later. Sellers need to put their buyer hat on. If they're going to go out and purchase a home, one of the first things they'll ask their realtor is, how long has the house been on the market? And they will negotiate with that seller much differently if the home has been on the market a week or 2 weeks versus 3 or 4 months down the road. And if the seller does not get the results that they're looking for in the marketplace, they will have to determine whether they want to get repositioned in the marketplace. And at that point, their new reduced price really is just a starting point for where a seller is going to come in and negotiate even below that. We don't like price reductions because it teaches buyers if we wait, prices will come down. Yeah, makes total sense. And I know, Mary, when you're going through your education, your designation with other agents that come in and sit in a class to get designation in how to work with sellers specifically, that you've got some top strategies that you use. Let's first talk about the sellers and putting their home in a good condition for market. What is that? Well, I've always felt that price relates to condition, and I think it's just an unusual, really old method that's still around in our real estate industry that we're pricing homes without knowing the condition of the house. So we help our sellers put their home in good condition, and we believe sellers can either know about the condition of their home early before they come on the market or wait till the buyer has them under contract. And if the buyer has them under contract, they lose their negotiation advantage with the buyer. So we never want a buyer to know more about the home than our seller does. So we have a professional home inspection done before the seller comes on the market to ensure that there are no major issues, health, safety, or structural. And if there are, the home is priced accordingly. We also have an extensive list of affordable handyman and vendors who can help the sellers with anything that needs to be done to get their home market ready. So one of our first strategies is to make sure that the house is in good condition. People pay top dollar for homes that are in good condition. Most sellers can do a lot of maintenance type items themselves, which saves them time and money. We also provide professional staging for our sellers. How you live in a home is much different than how you sell a home. And that's, again, something that we invest in for our clients. And we are very committed to helping our clients' homes be the best-looking property in the marketplace. Buyers buy homes emotionally, and they justify logically. So the better the homes look, we get better professional photography, we get a better online presence, and our homes really stand out in the marketplace. We personally view the competition. Oftentimes, realtors will say something's updated, and when we go out to view the home, it's painted cabinets. That's a much different update than somebody that's got a remodeled kitchen. So I think agents really need to take that time to go out and physically look at the competition, as well as carefully analyze the sold closed properties. The other thing that we do is we analyze both the market and market conditions. When inventory is low and buyer demand is high, prices go up. And so an agent really needs to understand not just the amenities and the value of the home, but where that relates to overall market conditions. And that will tell a seller where in that price range they want to be properly positioned to create the results that we're looking for.
Sure. So if you're just tuning in right now, I'm having a conversation with Mary Lee with Windermere Bellevue Commons. Listing a home for sale is an art, and it takes a real talent to be able to maximize that potential. And I want to go back really quickly, Mary, because we're running out of time here. I never have enough time for my guest. But I want to go back to the inspection, because that is a real, you will not have every listing agent out there advising their sellers to get a pre-inspection. But what I want to say is just think if you were a buyer and you knew up front what the issue was, or when you knew after, they're going to find out what the issue, the condition of that home is. And if you find afterwards and the seller's in the middle of a closing process, don't you think, seller, that it's going to cost you more money to get that buyer to continue with the process if you're already in contract? Is that correct, Mary?
Absolutely. A home inspection contingency always means a second round of negotiations with the buyer, either on price or fix-ups. And we have not sold a home with an inspection contingency since 2005. So our sellers get the joy that comes from having multiple offers in most cases. They get their choice of buyer's price and terms, and they go straight to pending. The buyer sees the condition of the home up front. That report is made available to them. And, sellers hire us to solve problems. And this is a big problem that people who are not encouraging their sellers to get pre-inspections are not solving.
And what about with those 20 buyers that are out there making an offer on a home and they've all got their inspectors coming into the home? I mean, that's put some pretty strong damage potential as well when you've got multiple inspectors and inspectors going in and going through all the details, which can, for the condition of having those people in and out doing all that, doesn't sound like it's a good deal either.
Absolutely. 9 out of 10 buyers look at our pre-inspection, and it's very thorough. It's written just the way it would be for a buyer. And most of our buyers don't get their own inspection. And we're starting to see some buyer fatigue in the marketplace. Buyers are getting pretty tired of spending $500 to write an offer on a house, to get lined up in a multiple offer situation. We've run into buyers on our listings that have done that 8 or 9 times. So, they've spent $4,000 and haven't purchased a home. So some of those buyers are stepping out of the market. And I will tell you that buyers and buyers agents flock to our listings because everything is available ahead of time. People are information gatherers. It puts their mind at ease that we've got a good product that's well positioned in the marketplace and really in top condition for the buyer.
So, Mary, as we're wrapping things up with you, are there any other last final tip that you would give to a seller that's listening to our show right now?
When you interview your agent, definitely talk with them about their process and what their plan is for being proactive in overcoming problems, and specifically what their statistics and sales results are. I think a lot of sellers hire an agent based on personality or whoever gives them the right price, and that's definitely the wrong plan. We've got some great resources on secretstoSellingYourHome.com. There's videos a seller can watch on getting their home ready, how to select an agent. There's a questionnaire that they can use. They can learn more about the benefits of a pre-listing inspection. And you really need to look at their statistics. You're hiring someone based on their proven results, and an agent should be able to share with you their average days on market, sales price to list price ratio, give you testimonials, and make sure you hire somebody who is heavily committed to getting the results that you're looking forward to.
Makes total sense. Pick up the phone, give the show a call, 1-855-400-1150. I'll get you directly connected with Mary. Coming up next on the Money Hour, many people avoid estate planning because they think it's focusing on death and funerals. Actually, it's really the opposite. Estate planning focuses on life and getting you set up and getting your family set up for your asset protection. Matt Loftin with Davis Wright Tremaine right here on Alternative Talk, 11:50 a.m. after the short break.
So, Jacqueline.
Yes, Mom?
I wanted to talk to you about something, and... Oh, wait, hold on. I just got a text. Oh, there's another one. Wow. Busy me. So, anyway...
Oh, wait, Mom. I just got a message. My friends keep commenting on my comment. Oh, there's another one. So many comments on my comment.
Oh, I can't wait to watch TV tonight. Playoffs!
Hey, guys, check out my new video game. Pew, pew.
Wait, Mom, what?
Huh?
What? Hold
What'd
on.
you say? Wait a second, what?
This weekend, unplug. Take your family to the forest. There's nothing in the world like experiencing nature firsthand. Trees, paths, bluebirds, streams. Getting closer to nature can get you closer to your family. To find the forest nearest you, go to discovertheforest.org. Brought to you by the U.S. Forest Service and the Ad Council.
To defeat blood cancer, it will take the best scientists, the top doctors, and the finest laboratories, not to mention a crew of dedicated sailors. Cancer cures today, not someday. That's the goal. Raise a sail to find a cure. Celebrating the 20th anniversary, the Leukemia Cup Regatta benefiting the Leukemia and Lymphoma Society will take place Saturday, June 7th at Elliott Bay Marina. Register today at leukemiacup.org/WA. That's leukemiacup.org/WA.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on Alternative Talk, 11:50 a.m., the Saturday, May 17th show. I've built a network of elite industry professionals every week sharing their knowledge and expertise with my listeners. If you're hearing the show at a different time or day, you're listening to a rebroadcast, but we're here to assist and help any of our listeners. Please pick up the phone, give the show a call, 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. In studio right now, Matt Loftin with Davis Wright Tremaine. The significant loss of one's estate to payment of state and or federal estate taxes or state inherited taxes is a great motivation to talk with an expert and find out what you need to do to protect your assets and make sure they go in the right place. Matt, thank you for coming into studio today.
Thanks for having me, Tina. I appreciate it.
Matt is an attorney with the law firm. He counsels individuals, families, and businesses on a broad range of trust and estate matters, including business planning. He advises clients on tax efficient wealth and property transfers made during a lifetime and at death through the utilization of client-specific planning techniques, including charitable planning, business succession planning, and specialist needs planning. In addition, Matt represents personal representative executors and trustees in an administration and trust and estates. Matt is an active author and speaker for both the State Bar of Texas and the Washington State Bar Association. Well, Matt, let's go ahead and talk. I'd like to give my listeners a little bit of a breakdown about your legal practice at Davis Wright Tremaine.
Sure. Primarily I would consider my legal practice to be estate planning, and what that means is that I assist clients with the transfers of their wealth and all the issues that are associated with that. It's kind of a personal relationship with the client, and so when I meet with the client and take them on, I actually take on all of their assets and have to know kind of a little bit about the legal aspects of everything. So I have to know a little bit about real estate, tax, life insurance, employee benefits, just basically everything that they have as assets we want to think about when we're thinking about how we want to transfer those either during life or at death to other people.
Mm-hmm. Okay, so last time we had you on the show, Matt, you had discussed the numerous non-tax reasons someone might have for needing estate planning. Could you briefly mention some of those reasons why someone should initiate or revisit the estate planning process with their attorney, someone like yourself?
Sure. I think, first of all, if someone doesn't have anything in place currently, they probably should do that and get in touch with someone who can help them out. I think that way they can kind of control how they want their assets to pass. We can analyze what their assets are worth, what the potential tax impact is upon any sort of transfer that they would make, either upon their death, like I said, or during life.
Mm-hmm.
If someone currently has documents in place and has things set up, I think we usually try and set up our estate plans to last between 3 and 5 years, and then we'd want to try and revisit that. That's basically due to maybe changes in tax laws that have occurred, and that actually has happened quite frequently in the last few years.
Yeah, so maybe check in once a year now.
Well, it's kind of getting that way. Some things are kind of getting made permanent, at least from the federal aspect. But statewide, there's been some changes here in Washington. But, other things would be like death of a family member, if a child gets married. A big one is if individuals have minor children because they'd want to maybe designate who they would want to be the guardians of the children, if something were to happen to them, and you can do that in a will. Okay. The receipt of a large inheritance. I think retirement, a new job. I know your listeners are into the acquisition of houses or other real property, and I think that's kind of an event that you would want to think about because it's not infrequent that I encounter a client who has a deed set up and maybe the title of that property isn't structured appropriately. And it can create some tax liability when perhaps a spouse passes away and then the surviving spouse has to deal with some of these issues. So, it could be for rental properties. I think anytime someone acquires those, you want to think about if the proper business structure is set up to kind of limit liability on anything with those properties.
So really anything, if you're listening right now and you're having any life-changing event or any financial purchase-changing event or assets, it's really a time to pick up the phone and talk to your estate planning expert. And if you don't have one, you surely need to give the show a call, and I'll directly connect you with Matt. Again, the show number is 1-855-400-1150 or online at the moneyhour.com. And Matt, you had mentioned in the introduction that you consider yourself a tax attorney who specializes in estate planning, and so much of your practice revolves around clients' desire to minimize or completely eliminate their transfer taxes. Can you explain to us what you mean by transfer taxes?
Sure. I think from a tax perspective, there's 3 different types of taxes that we're talking about. Transfer taxes is probably a little bit too broad of a term because there's certainly other taxes that occur upon transfers of assets or property. But, the primary one that people think about is the estate tax, and that is obviously a tax on the transfer of property at an individual's death. Another type of tax is a tax on gifts. So we've got gift tax, which is a tax on donative transfers made by an individual during life, either outright or in trust, with some exceptions, which I'll mention in a little bit. Then there's a third type of tax, which is called a generation skipping transfer tax, and I'm not going to spend too much time talking about that, but it basically occurs on transfers of property that would pass, say, from a person to their grandchildren or to an individual who's more than 37 and a half years younger than the donor. And these systems, these taxes are assessed on a federal level, obviously, and can also be assessed on a state level.
So also then, what do you mean when you're saying about the system clients with the tax planning?
Sure. So when I talk about doing tax planning and when I sit down with the client, there's kind of 2 different avenues that, reasons why people would really want to talk with me. One, obviously, are the non-tax reasons, which I've kind of mentioned, and essentially to control how their assets are divided at their death or during life. But the second reason is for these transfer taxes that could potentially occur. And as I mentioned, there's a federal and a state system. Most of the changes, which I think we just alluded to a little earlier, with the federal tax code at least were made permanent at the end of 2012 with this fiscal cliff and the American Taxpayer Relief Act. Mm-hmm. And so we've actually been provided a little bit of stability there, which we haven't had for probably a decade. And so we can kind of plan that, this is how the system functions. And how this is set up is the code says that you have an exemption amount which provides that up to that amount of the exemption you can make transfers without any sort of estate tax or gift tax. Now, this is fairly high. Currently on the federal level for the estate and gift tax level, there's a $5.34 million exemption, which means the first $5.34 million that an individual transfers either by gift or estate, and that's combined, will be tax-free, but anything above that amount is going to be taxed at probably a general rate
above that amount, they should pay some taxes.
Yeah, well, it's about 40% right now. It kind of rates up, but that's the highest level. Mm-hmm. And obviously, most Americans probably aren't thinking about that right now, but it is something that certain people do have to be made aware of. But because they're over this exemption amount. There's also certain exclusions that you are allowed for gifts each year, and so a person can make up to $14,000 to one person per year without having any sort of use of exemption or any sort of tax impact at all. So these are pretty generous. They do change every year. The exemption federally is 5.34. Last year was 5.25. So even if you have maxed out your exemption, you can certainly utilize this $90,000 increase from 2013 to 2014 to kind of pass some additional assets tax free. Okay, so Matt, you had mentioned that there are federal and state taxes, transfer tax laws. So what about the state aspect of transferring taxes here in Washington State? Sure. I didn't mention that earlier, but this is kind of the point where if you've kind of been tuning out or the listeners have been tuning out to think that they're never going to qualify for the exemption, federally they probably need to listen to this portion, because in Washington, each individual actually is taxed separately from the federal amount. And they're taxed on any transfer of assets or anything that's over $2 million per person. It actually has gone up for inflation, so it's $2.012 million per person for their lifetime. And so anything that's going to be over that amount at death that they're going to pass to someone else would be taxed, and that's going to tier up from 10% up to about 20%. And so, most people may not think that they have enough to reach that threshold, but they just might. I think when I talk with people, when I mention life insurance and employee benefits plans, things they don't think about. I mean, if you have a policy on your life that's $500,000 as a death benefit or $1 million as a death benefit, that full amount actually counts towards your taxable estate. Oh, wow. So if someone has a policy like that, they could easily have a taxable estate, and so they need to think about doing some planning to try and get themselves under that amount before they pass away. Makes total sense. So are there other tax considerations, Matt, besides the ones that you have mentioned? Yeah, there is the income tax aspect, because the exemption levels, at least federally and state, are fairly high. We want to, when I talk with clients, I want to discuss with them whether it's okay, whether it's better to gift an asset or to hold on to it until their death and then have it pass via their will or via their estate some other way. And the difference would be that from an income tax aspect, when someone passes away, and say you have a highly appreciated asset that when they purchased a house, say, for $65,000 way back when, and then it's appreciated to $2 million, all of that inherent capital gain in the asset actually is eliminated if someone is holding an asset and it passes at death. And so, we want to discuss maybe holding on to highly appreciated assets until someone passes away, as opposed to gifting an asset, because when someone gifts an asset, that lower basis is actually transferred over to the donee of the gift. And so you're actually just passing along that inherent capital gain to the donee. So when they go to sell, say, the house later down the road, they actually have to realize all of that capital gain on the sale. So there's some big mistakes in every aspect regarding money. There are big mistakes you can make in real estate. There are big mistakes you can make in my arena with mortgages. Obviously, Matt, in listening to you today, there's big mistakes that can be made by not
educating yourself and talking with a estate tax planner or an estate attorney. So any final advice that you have, Matt, before we wrap up my time with you today?
Sure. I think besides meeting with an attorney to talk about these things and to get an understanding of specifically the state estate tax that we have here in Washington, people need to think about whether it's advisable or they're able to perhaps gift some of their assets away before they pass away, because Washington does not have a state gift tax. And so essentially you could transfer these assets before you pass away to other people without any tax impact versus perhaps holding on to them until the individual passes away and then having to realize some state estate tax where they might not otherwise. But it's always a balancing act because, as I mentioned earlier, there's the income tax impact between, if you hold on to it at death, you could eliminate a lot of income tax to the potential beneficiaries, but you also could incur some estate tax. So, when I sit down with a client and we're talking about these assets, we kind of have to do a balancing act and do a real analysis to determine whether it's better to try and eliminate estate tax or to try and eliminate income tax.
Sure. And so if you're listening to the show today, we've had some awesome guests for my first show here on 1150 AM. And give the show a call, 1-855-400-1150. I can connect you with any of my guests. Everything takes planning. If you're looking at a mortgage, you need to look at all your loan options to make sure that you know you've made the right option. If you're listing your house for sale, you've got to understand what the market has to offer to make sure that you're strategically listing that. And if you're looking for an agent and who to work with, you've got to know the questions to ask to make sure that you're finding one that works for your best interest. And last, with Matt, you got to sit down and you've got to understand what your estate, the best way to organize your estate to make sure you're taking care of your loved ones when you do leave. So on that note, it is time to wrap up the show. This is your host and mortgage expert, Tina Mitchell, signing off for the day. Enjoy your Saturday. And I look forward to talking money with you next Saturday, same time, right here on an Alternative Talk 1150 AM. Thanks, everyone.
The preceding program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit AbsoluteLoans.com or call 888-90-HOMES for cost information.